Hey guys, Alchemist here. I hope you've all had an incredible week, and I do apologize last week for not getting the Outlook out. I was actually traveling with one of my best friends and also my personal fitness coach as he was doing a bodybuilding competition, which he actually came second in the novice category after taking out first in states. I do also hope you enjoyed watching the liquidity lecture, which I did drop last week. If you haven't yet watched that, I will be posting a link for it up in the top right corner of this video, so you can go ahead and watch that now. And that was one of over 40 videos within the course, each module having its own quizzes and assignments, which I personally mark and provide you with feedback on, which you need to pass before then progressing to the next part of the module. That way I know that you have 100% understood the foundations and that you can build upon them to become a master trader as I am. So let's now jump into AU and have a look at how the outlook was for the past 2 weeks, as I didn't actually change these lines on here since the first one I did 2 weeks ago. But the idea here was that after the 4 hour was bullish, after we had this break of structure, that we should be tapping into this supply. So the last candle formed was this one here on Saturday, and that we should be coming back down into a newly formed demand flip to then be taking out this high here, targeting the liquidity here. And we can see actually when price did arrive at this liquidity point, we did drive straight through it with this imbalance here, as there were a lot of orders to take, to potentially be tapping into this extreme of the daily, which is the daily supply above here, before potentially coming down to gather more orders. And essentially this daily high should now also be failing after we had a successive 4 hour break of structure as well. So let's delete all of these drawings and start fresh. So I will hide drawings. Maybe I will delete them just in case, 417 of them. We'll go out to the weekly and identify our weekly demand and supply levels. So this here, that is our weekly demand. And our weekly supply were these buy to sell wicks up here. Okay, so on the weekly, that's the only thing we need to do. Jump down to the daily and identify the daily break of structure, which led to the weekly demand zone, which gave us a bullish pullback of greater than 110 pips. And that is this one here. So that's our daily boss. Daily high being the highest point above. And the daily low being confirmed after we had a bullish pullback greater than 110 pips. Now these highs and lows are still intact, so our daily range remains the same. This is our daily low, high, and daily boss. All we need to do on the daily, so jump down to the 4 hour. So the previous 4 hour boss was from this high here to here, once we had this candle closing above. Now to identify our next 4 hour high, it would be after we received a bearish pullback greater than 90 pips. So here we do have a bearish pullback a lot greater than 90 pips. So at the time, this would have been our 4 hour high. So let's just mark that out. This would have been our 4 hour high. And then here we see this 4 hour high failing with the candle closing with its body above. Therefore, we actually have a new 4 hour boss. Once we have identified that this is our 4 hour boss, we simply identify the 4 hour low as the lowest point below this new break of structure line, which we can see was actually just swept here, but we haven't yet closed below. So this is our 4 hour low. And then if we follow price above the 4 hour break of structure line and wait for a bearish pullback greater than 90 pips, which here we have 96.4, we can then identify this as our 4 hour high. So our 4 hour range will be from here to here. Let's now mark out some POIs. So we'll start from the daily low. You can see here we have these wicks as the extreme, which are mitigated here. And then we have this candle here, which was mitigated here after we had this sweep. Then we had this whole pivot demand, which was mitigated here. This was the extreme demand of the 4 hour leg, which we did see a liquidity sweep below, but no body close. Mark this out as a sweep as well. We had this as the supply zone. We had price interacting with the supply zone, giving us a inside bar, and then we had this candle trading lower. So that is our flip. We have the extreme supply here. can take it to this week as well. You can see that we've had a liquidity sweep here. We also have this new supply zone in the formation of this week, which price is currently in after seeing the news occurring from NFP on Friday. Okay, so the rest, no more liquidity here after price tapped into this. The only sort of liquidity we will still have, and we have an unmitigated portion of this week above. Okay, and then the highest part of this week above here as well. Okay, we can just mark this as the whole supply range and leave those there as the sort of refined areas we can see price tapping into. Now from the bottom of here, after we tapped back into this extreme, we'd have this as a demand. We'd have this here as the supply, which led to a lower low. Okay, then we have a newly formed flip zone here in the formation of these buy to sell wicks. And then tapping into this supply here as well, we do have these buy to sell wicks. Just note they don't actually form demand zones until this high fails. So up and until this point, this supply is actually still in control, and it's in control until we have a body close above, and that would signify its failure, and then this demand zone would actually be formed. So we can leave it here. Just note that it's not actually yet a formed demand zone. It will be if we close above this with a body break above, and a body close above. So now let's just interpret this piece of price action here. So what do we have? We had this demand zone, which swept liquidity below, and we had a very nice impulsive push up. We had a retracement, and then we've tapped back into this supply zone. Note, this supply zone failed to set a lower low. Therefore, we knew that this supply zone was a targeted high and that price should be breaking above. We did have liquidity resting above all these flat highs here, which price has taken all of that liquidity, pushed above into this extreme of the daily range. And then we saw a very corrective bearish pullback, okay? We had a momentous, full of momentum, a momentous push up, and then a consolidating return to this zone. Price absorbed the orders, swept the liquidity above all these zones, tried this demand zone, then tried to hold again, but essentially it failed. We had a very nice sweep above, taking the liquidity above all these lows, pushing into this extreme of this demand, forming a new supply zone when we created a new lower low here. Price then has come back into this supply zone. The supply zone has failed to hold, and we had the absorption of orders here. So that wick is just signifying that supply really did try to hold there, but essentially it has failed, and price has pushed now back up into this supply zone here, and we're waiting to see price's further intentions. So what can we say, and what should occur here at this point? So this 4-hour high, if its objective was to set a lower low, okay, it's failed in doing so. Therefore, this 4-hour high is a targeted high. Okay. Not only that, but we also have 4-hour here as bullish. So the expectation of order flow is that price will go bullish, come back down into discount before then breaking this 4-hour high. And we do have the daily high above here as well. So although we have this wick here, we do have a very small portion which still remains unmitigated. This is sort of the last point of defense for the daily high. If this fails to hold, then the daily high will also be broken. Okay, so we can drag that across, knowing that's the absolute extreme of the daily range. And price should be targeting this 4-hour high as it's failed to set a new lower low. But remember that the overall direction of the daily is still bearish. Okay. So if we do break this 4-hour high, we can potentially be seeing how price will react from this extreme. We can potentially sweep this, which would be great. If we do sweep this, I'd love to see a very aggressive reaction away, as there's going to be tons and tons of liquidity above this structural high here, for then price to either remain bullish and set a new higher high, or what I believe would occur is if we do sweep above, we will then turn bearish, and then we can be targeting somewhere lower in this range as well, as the weekly is still bearish and the momentum on the daily, if we go back out to the daily, if we have a look at this here, something I had highlighted to the members the other day in the Discord is if we look at how long it took price to arrive from this high to this low, it was 9 days. Okay. If we then look at how long it took price from the low to return to this high, and it hasn't yet actually been able to come all the way to this daily high, it's taken 26 days. Okay, showing that the momentum to push us down was a lot greater than this buyer's momentum to push us back up. So we can just be targeting a little bit more liquidity, potentially just above the 4-hour high. We don't actually need to close above the 4-hour high. We can just be sweeping the 4-hour as well. So what I mean by that is, instead of sweeping the daily, we could see price just sweeping the 4-hour. And then if we do see 15-minute structure and order flow realigning to bearish, we can definitely be taking shorts into an unmitigated demand first, waiting to see if that's going to hold. So we could potentially be targeting this POI here, or even just taking large partials at this area, as 4-hour is still bullish. Okay, keep that in mind. If we just sweep, we can be taking a large portion of our trade off here, and we could just be leaving peanuts to be running here. But if that does occur, we should see that this 4-hour low could potentially be targeted as well after we sweep the liquidity above, and if that gives us a very aggressive bearish reaction down, and then we would see how price would react as we sort of arrive to this daily low here. So that's what I'm sort of anticipating for the next couple of weeks. It doesn't necessarily need to occur this coming week. So we'll leave that on here for AU, and we'll jump on and have a look at EU and GU. So if we have a look at this here, we did identify that this 4-hour high should be a targeted high, as the high failed to set a lower low, and that this high above here as well was also going to be a targeted high, and that we should be closing above. So we anticipated that we would sweep this 4-hour high to gain some more liquidity, push down into this newly formed demand zone, and then attack this targeted high, which, as we can see, that is exactly what has occurred. And then we also did anticipate that this demand zone below here should be mitigated, and that's exactly as well what's happened right before FOMC announcement was on Friday that's just passed. So it looks like this outlook was quite good as well. What we'll do now is we'll actually just clear all that's on the charts, and we'll just start nice and fresh. So remove 252 drawings. Perfect. Go out to the weekly. And in terms of our weekly supply, we were still within this one here. Okay, and our weekly demand, we had swept below. Let's just drop a horizontal ray, and we'll zoom into this piece of price action. Okay, perfect. So we do have this POI here that's swept liquidity. Okay, so we'll get rid of this horizontal ray, and I'll just show you the liquidity sweep here. As we've had these candles trading higher, creating liquidity below, price then tapped into that liquidity pool, liquidated, and then pushed above. So this here is that sweep. Turn this into a demand zone, and then we'll drag this out to the right. So as we can see here, price has interacted with this, and we've actually swept the entirety of the POI as well. Okay, it's just a sweep, as we haven't actually had a body close below. So on the weekly, we need to identify the weekly demand and the weekly supply that we've been trading between. We have now completed that objective, and then we can jump down to the daily. I'm just going to minimize this so that it's not too big on our charts. When we look at the daily, the previous daily boss was from here to here, and that is still intact. The reason that's still intact is neither the high or the low has failed since. So this one here, after we had this bullish pullback greater than 100 pips, 333 pips, this here was the daily boss, leaving this to be the daily high. And then below here, this is the daily low. So our daily range is from here to here, but we don't actually mark out premium and discount on the daily, only on the 4-hour and the 15-minute. So we don't need to be dropping that tool here. Again, that's all that we need to do on the daily. We know that this is the weekly supply zone. I'm just going to minimize it a bit just so that we can have a clear charts here. Once we've done that on the daily, we can jump down to the 4-hour. And so the previous 4-hour high was this one here that we said was targeted. And then once we had a body close above in this bullish candle here, this actually became our new 4-hour boss. So this being the 4-hour boss, to identify our 4-hour low, quite simply, we just identify the lowest point below that break of structure line, which is here. This is our 4-hour low. And then the 4-hour high is set after we have a pullback greater than 80 pips. Okay, so there we go. This here is therefore our 4-hour high. So our 4-hour range is from this low to this high. And we are bullish on this time frame. So let's identify some other POIs as well. We can see that we did actually have a demand chain building from below. So if we look at this whole region here as a pivot demand, prices tapped into that there, swept the liquidity below all these lows, no body closes there. Then we created a new POI, which prices then tapped into here. And then again, this extreme of that 4-hour leg is the demand that's currently holding and pushing price back above. We do have a very nice liquidity sweep here, which price is actually within that supply region at the moment. Beautiful. And if we look to the left, starting all the way back from our daily range, we have this very nice extreme here. This also did sweep liquidity. Beautiful. You can take it from this one here after we had the inside bar. And then when price arrived here, on this time frame, it looks like imbalance. On a lower time frame, there probably was some form of structure within this imbalance that prices tapped into and reacted out of, or it could also be just the formation of this whole larger supply range from this candle. Okay, and then within this 4-hour range, let's identify some more POIs. So at the time, we had this here as a supply zone. Therefore, the flip of this supply zone would be here. In this case, it is also swept liquidity. Prices tapped into this demand zone here, try to push above and hold, but essentially demand has failed and we've pushed lower after sweeping the liquidity above these highs above here. We also have this POI, which gave us this interaction there. Again, that one has also swept liquidity from this inside bar onwards. Moving up, we do have some interaction here as well. So when we see zones like this, and if you're a member of the course, you'll understand, we can never just mark out this demand zone without marking out the corresponding supply zone, because the most important thing for our strategy is to see that interaction between suppliers and demand, or sorry, between buyers and sellers, just to actually see the change of hands and to see who's in control. So this here was a supply zone because it set a lower low. Prices come back and tapped into the supply zone, absorbed the orders, and then essentially supply has failed to hold, and we had bullish momentum pushing above and closing above. So this here is a interaction zone, and it's the flip of this supply as well. And then we can mark out the extreme. The extreme is always going to be valid. And then tapping into here, we also have this candle, which has swept liquidity in the form of the inside bar in between. Okay. And we can see when we did actually have this very large wick to the upside, we swept the liquidity above all these highs, tapped into this supply zone, and then we've pushed lower into this demand zone. Now price is back up into this wick after we had the FOMC announcement. So if we look at this here, 4-hour is bullish, daily is still bearish, but we do have this unmitigated zone above, and there's going to be a ton of liquidity resting above these highs, sorry. There's going to be a lot of liquidity to be targeting there. And the expectation of order flow, especially that this demand zone looks to be holding, is to see this 4-hour high fail, as it should be a targeted high, as it's failed its objective to set a lower low, lower than this low here, which is the current 4-hour low. So we could see there might be a unmitigated portion in this wick here. We do also have these buy to sell wicks, which have sort of been mitigated. But we can see the upper portion of this wick remains unmitigated, and we do have all of this as sort of inducement above that zone, or sorry, under that zone. So we could potentially see price reaching for this liquidity, tapping into this zone, and then we'd need to see what 15-minute structure and order flow was at the time. Potentially, if we did have a 15-minute change of character short, we could be taking very, very short-term shorts into an unmitigated demand zone below. But ideally, the concept here, or the idea, is that this 4-hour high should fail, as it's failed to set a lower low, and 4-hour is still bullish. So structure will hold until it doesn't. So the only way that we would turn bearish is if this 4-hour low was to fail. Up and until that point, we can assume that 4-hour should remain bullish and we should be targeting that high. So what we're looking at here is potentially price to be pushing up to this supply zone, having some sort of reaction, and then continuing bullish to hopefully take this 4-hour high and potentially be tapping into this zone above. Or we could actually see that this supply zone here will hold for a little bit. Potentially, if we have a look here, that hasn't really had interaction. So we could be this zone below. We could be seeing price coming all the way back to fill all this imbalance, or potentially just reacting off of these buy to sell wicks. So either to this level or to this level. Before then, if we have a bullish change of character, we can be targeting the highs. As overall, the direction should remain bullish. As 4-hour is bullish, we have a targeted high to be targeting, and we have a ton of liquidity above as well. Mark out a couple of these POIs as well, just so that we can remain consistent. The reason why I don't really love these buy to sell wicks is they don't look to be interacting with anything, right? Even if we were to take it from this whole supply region or this whole supply zone, doesn't actually tap into that. So on this time frame, this zone hasn't had any interaction. Potentially on the 15-minute there may have been, but on the 4-hour there isn't. So I don't think this zone's really going to hold on the 4-hour. If we did refine it to a POI on the 15-minute which had interaction with supply to the left, then potentially. But ideally, looking at this just like that, I don't think this zone will really cause too much trouble for price if it does retrace to it. But yeah, the overall sort of narrative and objective is that this 4-hour high above should be failing. So let's have a look at how this plays out throughout the week, and we'll touch base next weekend to see if this outlook was accurate or inaccurate. So looking now at GU, quite a similar sort of scenario as EU. And again, the outlook here was that we were going to sweep the liquidity above these highs, come back down to this newly formed demand zone, and then be taking this targeted high as well as the daily and 4-hour high, as we were bullish on both timeframes, and the expectation of order flow was for this high to be taken, especially after we saw here that it failed to set a new lower low. So we do have a new daily range and a new 4-hour range. What we'll do is, just as we did on EU, we'll delete all the drawings, only 45 on this one, and then we'll go back all the way out to the weekly and remark everything out. In terms of weekly supply, we had this inside bar above. And then in terms of our demand with this pair here, looking to the left, we're actually lower, or we came lower than we ever have before. This is new. I hadn't really seen this dinosaur icon before, which is telling you this is the very beginning. So we can't really be marking out a demand zone that we had interacted with. We can mark out a demand zone that price has created in the form of this wick, because we don't need to take the whole body of the candle, as this is going to be quite a large size. If we have a look at this candle, yeah, it's 878 pips. We can just clearly be taking the wick in this case. So that would be our demand zone. Looking at the daily, our previous daily high was this one here, after we had this bearish pullback, sorry. So once this then closed above here, we had a new daily boss. Having this as our daily boss, we can simply identify our daily low as the lowest point below this new break of structure line, which is here. That's our daily low. And then the daily high would be set after we had a bearish pullback greater than 120 pips. And there we go, we have it there. This here would be our daily high. So our daily range would be from this low to this high. But again, we don't need to be marking that out on the daily, only on the 4-hour and the 15-minute. So let's now jump down to the 4-hour time frame. Make these a little bit nicer, as I'm sure you're all aware I have full OCD with my chart lines at the moment. Okay, and in terms of our 4-hour, this was also our 4-hour high at the time. So therefore, again, this is also going to be our 4-hour boss. So here we can just be labeling this as daily plus 4H boss, leaving the daily low to also be our 4H low. And you guessed it, the daily high is also a 4H high. Very large range in terms of our 4-hour structure here, which isn't ideal, but we definitely do still have a lot of trading opportunities. So again, let's just start from the extremes and identify some POIs and see if we have any sort of demand chains here. Had a very slight tap there. Then we can take this newly formed POI, which we can see that's what price tapped into just before FOMC and us having that bullish momentum. We can see here this was a supply zone. So let's identify some flip zones off of the off the failure of this supply. So even this here, apologies, refined supply. There we go. So after we had this interaction here, we actually see this zone as a flip as well, which has swept all this liquidity. And then this second tap, even here we have another one. This was the sort of last point before the actual supply failed and we had a new boss. So this will be a demand. Once we've interacted with this demand, we have this, which then was mitigated by this wick. And then we can take the wick itself as a new POI, which is currently unmitigated. Did we have a sweep here? So the high of this candle is 15650 and this is 15661. No, so we don't have a sweep there. That's fine. Therefore, we're actually going to have liquidity resting above. Okay. As this didn't sweep the liquidity still above this high, and we've just now chained and created even more liquidity here. Identify some more supplies from the extreme. This one here was mitigated there. Take this candle here. This remains unmitigated. So again, this liquidity is going to be resting below as inducement for this zone above. When we had this stop here and this push up, it didn't have any interaction to the left, so we don't need to be marking it. Then we have this. Did that interact with anything to the left? No, not in this case. So you could be taking this as a whole demand zone, but that's not how we like to do it, and we don't like to justify it by changing methods. We remain 100% systematic and mechanical, so we will not be marking that out as a zone that's had interaction. Did this interact with anything here? So will these buy to sell wicks have come off of this? Yeah, okay, perfect. So we can see this here. This was a demand which has interacted with this supply. Okay, this here was a supply as it set a lower low. So let's have a look at the story that we're setting here. Prices come down, tapped into this demand. Demand has held temporarily to push price up. However, it then fails as this doesn't set a higher high, and instead we have a break and close below. Therefore, this is a valid supply as it set a lower low. Price then comes back and interacts with this supply, and we have a absorption of orders. Okay, how we know we have an absorption of orders is the wick up, and then the next candle's wick down. So that wick down is representing that supply really did try to hold on there, but essentially it failed. It pushed back down, and then we closed above. Price then remained bullish. We've come back down to retest this zone. There was very few orders still resting in the extreme. As we can see, this candle here didn't actually mitigate the lows, and these wicks occur below this wick here. Therefore, we've actually tapped into a little bit of volume of trades still sitting there. Then again, we have that absorption. So demand has briefly tried to hold on and we know that through the creation of the upper wick on the next candle. But again, demand here has essentially failed, pushed us down into the extreme POI we have here before this nice push up when we had the FOMC announcement on Friday. So that's, NFP, not FOMC. So that's sort of where we're at the moment. The 4-hour and the daily are both bullish. And so this high as well should be targeted as it's failed to set a lower low. And we should be trying to frame up some long opportunities, knowing that we have supply zones above to target, which are still going to have some liquidity. We do also have a sweep here below these lows. Okay, so we have a sweep there. We can take this wick as a new POI as well. And then if we have a look here, yep. So off of this flip, so as we were just talking about this demand that price came back and we have these buy to sell wicks which absorbed, we actually have a newly created flip. Just mark this out, then I'll change the color. So this one here is another demand zone. This is a supply zone. And again, what's the story here? So as we were mentioning before, that we still had a little bit of volume here, and so price tapped into it, absorbed the orders and continued bearish. We therefore have a supply zone here. Price is pushed up, interacted with this supply, and the supply has tried to hold. Again, we know that through the formation of the lower wick on the next body of the candle, and then essentially that supply has failed and demand has stayed in control. So this should be a protected low in theory in this time frame. And so if price does retrace to here, we should see higher prices, potentially into this supply zone above. However, just noting that we do have this lower portion, which is swept liquidity as well. So this zone could be inducement for this. It doesn't mean we don't play any sort of trades from here. We just wait to see the reaction. We wait to see confirmation. If it occurs here, we enter. If it occurs there, we get swept and then it goes to the lower one, we enter as well. And that's where risk management and trade management comes into it. You should have a very, very strict manner in how you manage your risk and how you manage your trades as well. So you should be identifying what's your total daily requirement or your total max daily loss that you're willing to accept. Once you know that, you break down as to how many sessions you want to trade and how many trades you want to take per day, and then essentially just calculate the risk you should be taking per trade, especially if you're trying to go for funded challenges or anything like that. This is a crucial step, which is covered off in depth in the course. And at the end of the course as well, I get all the members to create their own trading plan. I do give my template, and then you just adjust it as per your risk management rules as well as your trade management rules, whether you want to be moving to break even after you have taken the high that's caused the pullback to your zone, or whether you want to take partials, say for example 25% at 4 hour to cover your risk, as I do. There's many different ways, and we explore them all in the course as well, and for you to pick the one that's most appropriate to you. So if you do have any questions regarding any of that, please do let me know. And let's just finish off the forecast for this pair. So knowing that we are bullish on the 4 hour, knowing that this zone looks to be holding here, and we've had a very nice momentous push up, we could see price coming back to this zone, as we just mentioned, and then potentially be attacking this zone. When we do arrive here, note that we will probably stall for a while. Whether that gives us an opportunity for a very short counter trend move, okay, that's yet to be seen. If we do have 15-minute structure and order flow realigning bearish at this point, and we have unmitigated demand below, we could be taking a trade sort of like this, or we could just be waiting until this supply also fails, if it does fail. So we could be attacking this supply first, absorbing the orders, and then waiting for it to break. This break here would create a newly formed flip zone to then be taking a long opportunity to target this high. And that's the higher opportunity trade. It would be in premium of the 4 hour leg. So let me just drop the premium and discount tool. However, it would be pro trend to the 4 hour, as 4 hour is bullish. And we like to be trading with the overall trend. And the overall trend, as a day trader trading supply and demand, I personally believe should be the 4 hour. Many people do use different time zones, but for my strategy and for my members, we only use the weekly, daily, 4 hour, 15-minute, and 1 minute. No other time frames will be used. We can just flick through to sort of confirm a few things, but we never actually use them to frame up any sort of trade ideas. And so using the 4 hour, knowing the 4 hour is bullish, we should be seeing that this 4 hour high should be failing. And so that's where we should be targeting our trades. So let's see how this works out for this coming week. I am very excited for this week, as tomorrow, being the 7th of November, is my final exam for my double degree, where I'm finalizing my degree in finance and philosophy. So I'm finally going to get a bit more time to be more active with my own personal trading, which I will be doing again full time starting from Tuesday, until my girlfriend and I actually travel to Bali in a few weeks. And then when I do get back, I will be doing an FTMO challenge and sharing that all with you. The members have, the group has grown quite a lot over the past week or so, with quite a few new members joining and undertaking this journey and process with us. So if you are interested, please do let me know. I will be posting a few more testimonials and a bit more content on Instagram as well. So I'll leave the link to my Instagram in the description of this video. If you do have any questions, please reach out. I'm more than happy to jump on a call with you guys to show you what's involved in the course and what you're getting yourself into and all the services you will be receiving. And I hope you have a great week ahead. Stay safe, enjoy your trading, and I'll chat to you all next week. Take care.